Good morning, ladies and gentlemen. I am Lucia Jennings, founder and president of the Brazilian American Chamber of Commerce of the Southeast. Before we start the program, I would like to address some housekeeping rules. First, this event is being recorded and your microphone is muted and will stay muted throughout the time of the event. For questions, I ask you that you write your questions in the chat, and Jessica Dill will direct your questions to the panelists. The agenda of today's event is I will invite the Consul General of Brazil, Carlos de Abreu, to give welcome remarks, and then Doris Quiros of the Federal Reserve Bank will give her remarks. After that, Rodrigo Dantas will start the panel discussion that will last for about 45 minutes, and then we will open for questions. At the end, I will close the event. So welcome to today's webinar, The Risks and Rewards of Real-Time Payments is the Brazilian experience that we're going to share with you today. This event will bring together a distinguished group of panelists to discuss opportunities and challenges of a real-time payment environment when it comes to rebalancing convenience, risk management, and consumer protection. These experts will share lessons learned from their experience with building and implementing instant payments, while policymakers and practitioners in the US will share considerations that must be sorted out as the payment systems prepares to initiate and receive faster payments. This event is hosted by the Federal Reserve Bank of Atlanta and the Brazilian American Chamber of Commerce of the Southeast. The ACC is a nonprofit organization committed to providing our members with information, connection, and support of business development to foster trade and investments between Brazil and the Southeast of the United States. I want to take this opportunity to thank the Federal Reserve Bank of Atlanta for their partnership and trust. Stephen Kay, Jessica Dill, Jessica Washington, Doris Quiros, and the whole team that every year give us the honor to organize an event about Brazil. Our thanks to the exceptional, innovative, and knowledgeable panelists for accepting our invitation to be part of the discussion today. Jessica Washington and our panelists are Jessica Washington, Assistant Vice President of Retail Payments Risk Forum at the Federal Reserve Bank of Atlanta. Eduardo Chedid, he's the Vice President of Financial Service at PicPay. Dr. João Manuel Pinho de Mello, he's a former economist at the Central Bank of Brazil and Lehman Visiting Scholar at the David Rockefeller Center for Latin American Studies at Senior Vice President of Emerging Payments at Region Banks, and our very special thanks to our moderator, Rodrigo Dantas, he is a principal of Ernst & Young, EY, as we're calling now. Thank you so much for your invaluable contribution. Before I pass the microphone to the Consul General of Brazil in Atlanta, Ambassador Carlos Henrique de Abreu, to give his remarks, let me share with you his short bio. Ambassador Carlos Henrique is a career diplomat who assumed the post of Consul General at the Consulate General of Brazil in Atlanta in 2018. He's a native of Rio de Janeiro and graduated in economic science from the Center of University Education of Brasilia in 1986. He also took a commercial politics course at GATT, the General Agreement of Tariffs and Trade, in Geneva in 1986. Ambassador Carlos Henrique received his master's degree from the Instituto Rio Branco Brazilian Diplomatic Academy in 2002. At this time, he wrote his thesis on Argentina foreign exchange dilemma and the Brazilian interests. From 1995 and 1997, he served as a special advisor to Minister of Finance in Brazil. In 2005, he served as the head of the Division of Market Access in Brazil, and in 2011, as Director of the Department of United States, Canada, and Inter-American Affairs at the Ministry of External Relations. His most recent assignments abroad has been as Deputy Chief of Mission at the Embassy of Brazil in Washington and as the Consul General of Brazil in Sydney, Australia, before coming to Atlanta. Thank you very much, Ambassador Carlos de Abreu, and the mic is yours.
Good morning, everyone. Thank you, Lucia, for your kind introduction. As always, it's a great pleasure for me to join an event organized by the Brazilian American Chamber of Commerce of the Southeast in partnership with the Federal Reserve Bank of Atlanta. Through Lucia Jennings and Stephen Kay, I would like to thank very much the organizers for inviting me to make some introductory remarks. I would like also to congratulate our hosts for one more relevant and timely event this morning about risks and rewards of real-time payments, the Brazilian experience. In the future, when I look back to my days in Atlanta as Consul General, I shall have fond memories of your initiatives about Brazil. One thing I learned is that my introductory remarks need to be as brief as possible, since I stand on the way between an eager audience and a high-level and distinguished group of panelists and moderator, Rodrigo Dantas. Ladies and gentlemen, I recently spent a few weeks in Brazil with my family after a couple of years because of the pandemic. That is to say, before the launching by the Central Bank of Brazil of an instant payment system known as Pix in November 2020. I'm absolutely amazed about Pix. It has become so easy and secure to pay bills and transfer money in Brazil. This platform enables its users, people, companies, and governmental entities to send and receive payment transfers in a few seconds at any time, including in non-business days, without having to share details of their wallet, bank, or fintech provider. Pix is free for individuals and very cheap for businesses. It reduces the cost of Brazil's national financial system. Individuals and businesses can get a Pix key and a quick response code. Each user is identified by an alias like the phone number, the email address, a CPF, a tax ID, or random generated keys like a QR code. Once started, Pix transactions are irrevocable and processed individually in a few seconds. Pix will promptly notify the end users, both payer and payee, of the transaction's conclusion. Traditional payment instruments continue to be offered, and the same holds for credit and debit cards. Open banking is becoming fully operational in Brazil, a country larger than continental USA. We need to have the big picture in mind. Since 2002, the Brazilian payment system has been connecting all financial institutions at the national level and enabling intraday real-time settlement of transactions. And customers have the ability to perform real-time bank transfers as well. Moreover, Brazil has fostered competition in the credit and debit market and put in place the regulatory framework for the fintech industry. Indeed, São Paulo has become an important fintech hub in the world, with other Brazilian states following suit, and Brazil is already home of 22 unicorns. As you know, unicorns typically are tech startup companies, but what makes them unique is that they grow their value into the $1 billion very quickly with the help from venture capitalists and investors. They're called unicorns because they're extremely rare. Pix is already being used by more than 67% of Brazil's adult population, with over 115 million users. The Pix case confirms that open banking and technology can promote social inclusion and the democratization of finance. The Central Bank of Brazil, according to its president, Roberto Campos Neto, will soon be in a position to issue our national currency, the real or real, in digital form. I look forward to our panel this morning, as I see it as a unique opportunity to discuss risks and rewards of real-time payments, and to showcase the financial strength of Brazil in today's fast-changing and challenging world. I will conclude with a quick word about Brazil, a vibrant democracy, the largest economy in Latin America, a country whose economy has recovered its pre-pandemic GDP levels, a country that has a very high level of international reserves and very low level of foreign debt, and a country with a long-standing and strong partnership with the United States of America. Thank you very much.
Thank you very much, Ambassador. It's always a great pleasure having you here. And I know it's not forever that we're going to have you around. So whatever you are going next, I know you're going to have fun memories of your time in Atlanta, and you're definitely going to be missed.
Definitely, I will.
I would like to introduce you now to our next speaker is Mrs. Doris Quiros. She is the Senior Vice President for the Supervision, Regulation, and Credit, SRC Division for the Federal Reserve Bank of Atlanta. She oversees the 6th District Supervision of state members' banks, bank and financial holding companies, and U.S. branches and agencies of foreign banking operations. She has oversight of the district's credit and risk management, CRM, function, and serves on the Systems Supervision Committee and Bank's Executive Leadership Committee. Mrs. Quiros began her career as a statistical reports analyst at the Federal Reserve Bank in New York in 1991. She joined the Federal Reserve Bank of Atlanta in 1996 as a team leader in statistical reports. 3 years later, Doris transitioned to the bank's financial management and planning department. In 2004, she was promoted to Assistant Vice President, Financial Statistics and Structure Analysis. She later moved to Internal Audit, serving as Assistant Vice President and Assistant General Auditor. In 2013, Doris joined SRC after successfully posting for the role of Assistant Vice President, CRM. She has served as the Vice President of SRC Division since 2016. I wanted to welcome Doris Quiros to this welcome remarks from the Federal Reserve Bank of Atlanta.
Thank you so much, Lucia. So on behalf of the Atlanta Fed, I would like to welcome you to today's events. The Atlanta Fed side of this co-organized event reflects a partnership between our high priority strategic initiative called Promoting Safer Payments, Innovation, and Our America Center, which serves as an umbrella program for the Atlanta Fed's Latin America related work in payments supervision and research. We're fortunate to have had the privilege of working with Lucia Jennings and the Brazil American Chamber of Commerce for the Southeast for many years on programs related to understanding Brazil's economy and U.S.-Brazilian relations. And it is a very special honor for us to have Ambassador Carlos Enrique Mujan de Abreu e Silva with us today. So as many in the audience may be aware, the Federal Reserve is expected to launch the FedNow service in 2023. My colleagues are taking a phased approach to deploying the FedNow service to ensure the initial release is brought to market as quickly as possible while providing flexibility to adjust, augment, and add features in future releases to respond to industry needs or changes in technology. We've launched a pilot program in February 2021, including more than 120 participating organizations in an advisory phase to support the development, testing, and adoption of the FedNow service. Pilot group participants provide a diverse representation across financial institutions and service providers, connection types, settlement arrangements, and experience levels. The initial pilot advisory phase will be followed by an extensive pilot testing phase to ensure that both the FedNow service and customers are ready for production to launch and general availability of the service. As of May 2022, pilot participants have officially started onboarding onto the testing environment for the FedNow service. Over the coming months, pilot organizations will continue onboarding with the service, establishing connectivity, and performing technical and operational tasks that will lay the groundwork for full-scale end-to-end testing later this year. So while my FedNow colleagues are responsible for the rollout of the FedNow service, I am responsible for the supervision and regulation of the banking firms in our region. Our supervision teams focus on ensuring the safety and soundness of those organizations, as well as their compliance with federal banking regulations. The 2023 launch of the FedNow service will certainly have some supervisory implications. We are working now to better understand what those implications will be so that way we can adjust accordingly to augment the work we already do in the payments, liquidity, compliance, and operational risk areas. So though not an exhaustive list, there are 3 areas in which we hope that the panelists can shed more insight today. The first, liquidity risk. So the launch of FedNow service in 2023 will mean that FedNow payments will process and settle instantly on a 24/7, 365-day basis. Some questions that come to my mind are, how will instant settlement affect a firm's funding and liquidity profile? Will the timing of intraday funding flows and/or liquidity needs change as a result of FedNow's implementation? Will there be a need to hold more reserves to accommodate liquidity demands going into nights, weekends, and holidays? And are firms prepared to manage their accounts on a 24/7, 365-day basis in accordance with payment system risk policy? The second set of questions I have are around the fraud and compliance risk. So we've observed a sizable increase in fraud over the past few years, and many supervised firms continue to struggle to have adequate controls in place, both at large and small institutions. Moreover, our understanding is that quicker settlements may be more susceptible to fraud, especially at launch. Supervisors expect all firms, regardless of size and status as a regulated entity, to keep a close eye on adequate controls as they adopt instant payments. So some questions that come to mind for me here are, 1, do financial institutions have sufficient controls in place to monitor fraud around faster moving payments? And 2, do we need to revisit compliance or consumer regulations like the Bank Secrecy Act, anti-money laundering, and know your customer as we prepare for faster settlements? So in addition to the liquidity risk and fraud and compliance risk, a third risk is third-party risk management and cyber risk. And this is really near and dear to my heart. So third-party risk management is a considerable source of risk for large and smaller institutions alike, especially as more firms turn to outside vendors for payments, IT, and cybersecurity. In response to these risks, regulators have placed heightened oversight on the largest firms we supervise. So we anticipate that the third-party risk management and cyber risks will only increase as FedNow service launches and firms move to a real-time payments environment. Instead of posing questions here, I'll conclude with an important reminder to firms that even if you outsource a service to a third-party provider, you remain responsible for the provider's risk. So it's essential that firms have adequate governance, oversight, and strong risk management in place as they build out their systems. So all that to say that this event couldn't be more timely. We are very eager to learn from the insights of the Brazilian experience, and I look forward to the discussion of our distinguished panelists.
Thank you very much. Well, thank you, Doris. Thank you very much. And we all looking forward to the discussion. So let me just now take this time to introduce our only expert in Atlanta that I call, Rodrigo Dantas, that we are so honored to have him as a member of the Brazilian American Chamber of Commerce. And Rodrigo is the EY America's payment leader with more than 25 years of experience in financial services, fintech, and management consulting, leading diverse teams in highly competitive environments. He is a strong diplomatic negotiator, fluent in English, Spanish, and Portuguese, with an international mindset and high-level creativity. He has a record of success in building and running businesses and consulting practices. He graduated in economic science at the University of São Paulo. He holds a master's degree in business administration from Fundação Dom Cabral in Brazil, and a postgraduate MBA specialization on marketing and strategy from the Kellogg School of Management. Please welcome Rodrigo Dantas, and he will introduce the panel to you and start this great conversation. Thank you.
Thank you, Lucia, for the completely overstated short bio, but it's a pleasure to be here again. It's an honor to be part of this initiatives for the last few years here in Atlanta with the Fed and the Chamber. So thank you both for inviting me again to do this. So a couple housekeeping items before we get into the meat of the conversation. Everyone that's registered will receive after the call an email where you get a presentation about PICS that was done by my colleagues in Brazil of UI. So thank you, Ivan, and the team there for putting that together. That's going to be distributed to the audience here after. You also get on that same email everything that's going to be shown here for you. So if any you see there's going to be a presentation by João, there's going to be some other information that you will be getting via email. So no need to worry about that or ask for the presentation. You will get everything. So I will excuse myself to read the short bios of our distinctive panelists here, as I'm super happy that we are really able to build, high level panels every year that we're here at the Fed, and this year is not different, and really impressive. So start introducing the people by alphabetical order of last name. So first would be Eduardo Chedid, my good friend. Chedid is the executive vice president of PicPay, responsible for financial services. PicPay is the largest digital wallet in Brazil, with over 67 million registered users that have been using peer-to-peer and QR code payments since 2012. Prior to joining PicPay, he led Elo, a local payment scheme, to reach 17% market share and being the largest debit scheme in Brazil during the pandemic, when it helped millions of users to use the governmental aid. During his more than 28 years experience in the payment space, he also held leadership positions at Cielo, Visa, and Credit Card. Chedid, please turn on your camera for people to see you, and thank you for being here and for being part of this. I'm really happy that you are. And you have to turn on your mic.
Good morning, everyone. It's a pleasure to be here. And this is such an exciting moment and an exciting product. Instant payments in Brazil is just booming. It's going to be a pleasure to share some of our experience here with all of you guys. Thank you.
All right. So next I'll go to Professor João Manuel Pinho de Mello. And here difficult to build a short bio for him. So many things, so many contributions. So he is graduated in business administration by Getúlio Vargas Foundation in São Paulo. It's a master's degree in economics by the Catholic University of Rio de Janeiro, and a PhD in economics by Stanford University. He was an assistant professor and associate professor of the Department of Economics of the Catholic University of Rio de Janeiro, and currently is a full professor of INSPER. Before that, he was also a visiting scholar at the David Rockefeller Center for Latin American Studies and a visiting fellow at Kennedy School of Management of Government, both at Harvard University. He was a fixed writer of Folha de São Paulo, the biggest newspaper in Brazil. And in the last years, he has held many positions in the Brazilian government, promoting economic reforms and development. So he was special assessor for microeconomic reforms, secretary of promotion of productivity and competition advocacy, and secretary of economic policy. All of those positions held at the Treasury Department. And lastly, he was the director of organizations and resolutions of the Brazilian Central Bank, where he was responsible for developing the PICS. Now, my comment, he is known in the Brazilian market as the father of the PICS. So welcome to João Manuel. João, please turn on your camera and thank you, your mic. Thank you for being here. It's really a pleasure to be able to have you here.
Thanks, Rodrigo. It's my pleasure. It's an honor. Well, father of PICS maybe an exaggeration. This project has begun a long time ago, Anyways, it's a pleasure. I hope we can contribute with some insights from the Brazilian experience with instant payments.
Fantastic. Thank you, João. So next, I'll go to Tim Mills. So Tim is a Senior Vice President and Emerging and Digital Payments Group Manager at Regions Bank. In his role, Tim is responsible for developing, coordinating, and execution of the bank's emerging and digital payment strategy. During his 20-plus year career, Tim has gained extensive experience working with financial and non-financial institutions of all sizes on payment strategy, compliance, and emerging payments. Tim has served as a member of the National Automated Clearinghouse Association, known as NACHA, Payments Institute Board of Regents, Risk Management Advisory Group, and Payments Conference Planning Committee. He currently serves on the board of directors for NACHA, the Clearinghouse Payments Association, and Southern Financial Exchange. So Tim, amazing experience on all sizes of organizations and driving at a super relevant bank nowadays. So thanks for being here, and it's a pleasure to have you on the panel.
Thank you. I'm very honored to have been invited to be a part of today's event, and very excited to have this conversation about the role of real-time payments. I think, as some of the previous participants expressed, it's a very exciting time, I think, globally and for us here domestically in the US with the evolution of payments. So thank you.
All right. So lastly, but definitely not least, Jessica Washington. Jessica is a payments risk expert and assistant vice president with the Federal Reserve Bank of Atlanta. In this research and outreach role, Jessica is a recognized thought leader through her collaboration with industry participants such as financial institutions, fintechs, regulators, law enforcement, the legal community, and others in the Federal Reserve System. She regularly convenes and speaks to payment industry stakeholders to discuss trends in payments and to promote the mitigation of payments risks. Jessica shares her research through blogs, papers, presentations, and hosting forums. And now my comment about her is, the other day I was talking to a very senior executive at a client of mine, and he mentioned a rising star at the Atlanta Fed. But if I knew her, Jessica Washington, I said, well, to me, she's already a star, not rising star. So thank you for being here, Jessica. It's a pleasure to have you on the panel again.
Thank you, Rodrigo. It's so happy to be here again with you. I was here last year in a similar panel with the Brazil Chamber. So thank you so much. And I am here from supporting the bank's strategy and promoting safer payments innovation. So my group and across business line collaboration has been working together to talk about issues in innovation and making sure that we are moving ahead safely and securely, as the Fed's role in payments has been to promote the efficiency and safety and accessibility of the nation's payment services. And I will say that I'm here in a supportive role today. I hope to give the other panelists the floor, the majority of the floor, but I will say I'm not representing FedNow. I have some knowledge on the issue, but I'm not a spokesperson for FedNow, and I'm not a regulator. I get the benefit of talking about payments from an academic perspective, from a research and outreach perspective. So happy to be here today. Thank you.
Thank you, Jessica, for your contribution, and definitely noted the disclaimer. So let's get into it, guys. So to set the stage and make sure that we kind of are everyone on the same page, to start the conversation, I'll ask João to give us a short presentation of what PIX is about. So Lucia, if you can pull up that presentation, João will lead us through it, and then we'll get to the debate after.
Thanks, Rodrigo. While we wait for the presentation to be on screen, just a quick on the disclaimer side, I don't speak on behalf of the Banco Central do Brasil as well. I was a deputy governor until early February, but my mandate is over. So I also speak from a more of an analytical academic perspective as of now. I'm going to give a very quick overview of the instant payment project, known as PIX. If you please can move the slide. Just a little bit of the context in which the Brazilian Central Bank decided to launch the fast payment initiative as it did, with a strong operational and regulatory role. A few of the features that PIX was designed to have, a little bit of the current scenario, and some figures since the full launch of PIX back in November 2020, and a little bit of the roadmap. Can pass the slide, please. The goal here was financial inclusion, financial democratization, as a very general goal. If you look at some of the evidence, like the BIS has some figures across countries, and it does seem that Latin America in general has, compared internationally, relevant transaction costs in payments. And that might hinder both economic activity, but mostly as a goal here, financial inclusion. So the Brazilian Central Bank wanted to provide an additional payment scheme that was very cheap or free, very user-friendly, in an open platform to foster competition and in payments, and obviously quite possibly that could lead to competition in other, let's say, segments of financial services and intermediation in general. If you can move the slide, please. The context is, so we say digital revolution. That means this, right? Mobiles. While bricks and mortar were the main method of distribution historically. Now you basically you can distribute financial services, being a traditional bank or fintech, however we define that term, or a payment service provider, you can distribute through your mobile. That obviously we weren't the first to notice, but that changes the game, levels the playing field. And my personal view again is that this will happen, as we say in Portuguese, if. It's just a matter of making it more timely and more secure. And I believe at some point the Banco Central do Brasil has reached the conclusion that timeliness and security were best served by the regulator taking a very active role in providing this service. In making it available for payment service providers to provide service to end clients by running a payment scheme. In the context of Brazil and many countries, cash is still very much in use. Cash is expensive on many dimensions. And this is another, obviously, payment scheme that's owned normally and traditionally by central banks, and not differently in Brazil. The payment scheme cash is owned by the central bank, the Banco Central do Brasil, and which, as much as I know, will continue to provide this payment scheme, because it's still very useful, and it's very useful for the Brazilian population, but slowly and securely there is a goal of substituting away from cash. The Brazilian payment system prior to PIX, in my view, is very sophisticated. We have a vibrant credit and debit industry that provides a very good service to clients. Banks that already are very connected, very digital. In fact, real-time payments were already a reality in Brazil before PIX. A fully functional network of ATMs and bill payment that is quite frankly enviable to many countries prior to PIX. Now there were gaps, and PIX came also to fill some of these gaps. You can pass on the slides, please. PIX was to have these 7 features. Instant order of service is 90% at 6 seconds. Average is about 2 seconds. Availability 24 hours, 7 days a week. It's very secure. PIX started from scratch, using and taking advantage and leveraging from the experience that the industry has for a long time. So that combination is pretty unique. You have experience and you build from scratch. I think it's hard to do better. It's a serendipity. It has to be convenient, meaning that the regulator, which here slashes is the payment scheme owner, does impose user experience standards for participants. PIX was built to be a multiple use case platform, meaning you can do P2B, P2P, B2P, B2B, B2G, G2P, bill payments, whatever it is that involves payments, you can do with PIX. There is also an infrastructure of information for conciliation that is important, that the card industry does very well, but that is also embedded in PIX. And it's last but certainly not least, it's an open environment, meaning that the regulators / payment scheme owner here will make sure that the rules are such that anyone can operate in this platform, providing services in a level playing field ground. You pass on the slides, please. Sorry. The Banco Central do Brasil has two roles here. One is regulatory, which is it should be some regulatory role is very standard, but in this case it sets the scheme rules. So these are the PIX rules, meaning who participates, who qualifies, what's the minimum standard of user experience, security, know your client, fraud. But the central bank also operates. It operates two infrastructures here. One is a settlement, which is the SPI, and this basically leverages on what the Council Abreu has mentioned on an already 20-year experience with a wholesale and retail settlement that the central bank in Brazil has, which is a Sistema de Transferência de Reservas. But it also operates the aliases keys database and the aggregate information database. So you recognize a PIX payee by accessing this database from the central bank. The next slide, please. I think this might be particularly useful in this seminar. PIX was done in co-participation and co-creation with the private sector and the payment service providers. The Central Bank of Brazil does not provide any service to end users. It provides infrastructures, meaning the two operational infrastructures and a regulatory infrastructure. PIX is a regulatory decision by the central bank, meaning that it was not outsourced to the industry, but it was done with a formal participation of the industry in two manners. One is an ongoing formal forum with the industry, and I mean industry, I mean payment institutions, financial intermediaries, meaning banks or any deposit-taking institution, and also IT providers and service providers. As a matter of fact, anyone can qualify to participate in PIX Forum. And also, it's done less of an ongoing basis through public consultation processes, formal public consultation processes, in which the central bank suggests a set of rules and let society give opinions and analysis on that. Next slide. Now, this is just a quick timeline to the time of launching. I cannot possibly go through this in detail, but just to mean that this is a long process. In fact, this timeline starts in February 2019, but it goes back. It goes way back. As a matter of designing internally what was at that point called the ecosystem of fast payments. Full launch was mid-November 2020. Next slide, please. Now, these are quick figures. This is the number of PIX ID keys, as we say. These are aliases. Your email, a QR code. This is to identify the payee in a convenient, fast, easy manner. We're looking. This is measured in millions. Now, obviously, same payee can register several keys, but we're looking at 400 million keys registered at the central bank for payees. Next slide. This is the number of companies measured by different tax ID numbers, company tax ID numbers that have already used PIX in the sense that they have received or made a transfer. It's close to 9 million companies. We're looking at the number of companies measured by formal companies measured by ID numbers, tax ID numbers. In Brazil, it's like I think close to 14 million. So that covers more than 60% of the companies in Brazil have already made or received the PIX. Next slide. It's the same figure for individuals. This is different from the alias, so the keys, because this is the single individual tax ID numbers that have received or sent PIX. Almost 120 million people. That meaning in Brazil is the population. Brazil's population is 210 million, roughly 214. So that gives an idea of penetration. A figure that it's not here in the slides, but I like to cite, to quote, is we have a metric of inclusion by PIX, which means an individual, meaning a tax ID number, that in the previous 12 months before PIX launch hadn't made use of bank transfers and has made some received or made some bank transfers after the launching of PIX, that number is roughly 45 million people. Obviously, it doesn't mean that you're excluded. It's a metric, but it's a proxy. The next slide, please. It's a volume measured in billions of reais monthly. We are looking at Brazil's GDP is in December 2021 was close to 9 trillion reais. PIX will probably close May with close to 900 billion reais. Means 10% of GDP flows through PIX monthly. Just to have a sense of that figure, another fast payment initiative that is very successful and considered very successful internationally is India's UPI. This was launched, I think, back in 2014. India's, as a matter of monthly, I think it's around 5% of GDP. It was, in fact, quoted at last issue of The Economist. It was a 50% but yearly. Next slide, please. There's a number of transactions. We're talking about 1.6 billion transactions, 1.5 billion transactions a month. But sorry. This is just to compare with the rest of the other means of payments. The next slide, please. This is PIX. This is a little outdated because this is quarterly data, and the last available data is fourth quarter of 2021. Now, PIX is already like a third of debit, credit, and prepaid transactions. It's a little more now on my behalf. It has surpassed all other means of payments. Of course, we don't have cash here. Cash is hard to measure in this. Next slide, please. Now, goals were foster new business models, reduce transaction costs, and contribute to digitalization of payments and inclusion. I think so far one can say that it's been vastly successful. It's been challenging, but vastly successful. And I'm happy and available to answer any questions, specific questions on liquidity, frauds, and others, supervision or regulatory issues that we faced, that the Brazilian Central Bank had faced during these 18 months since launching. Thanks.
That's great, João. Thank you for walking us through all of that. A lot of education and stuff going on, and some of the questions that are being sent already being addressed somehow. So on the questions, we will try to address all of them through the panel. I already anticipate some of the conversations that we will have. We'll address some of the questions that are being popped up. But you also have the collateral materials sent your way that will address some of the questions. And if not, we'll always be available via email to make sure that everything's addressed after the call. So thank you. I'd like to ask for Jessica to make some comments. I mean, João mentioned about the why, right? The reasons why. It was this last slide, why this was made in Brazil and what were the intended outcomes, and in his view, they are being achieved. So what would be a parallel for the US, right? Why is triggering its implementation right now, and what's our desired outcomes, and how you anticipate that going on?
Great, thank you. So I will note that the Fed's journey to faster payments did start with a public consultation process, and that was Payment Systems Improvement Consultation Paper in 2013, which then started discussion within the industry. And in 2015, strategies were put forth, and then in 2017, we finalized next steps in our intent to create a new faster payments model. Our desired outcomes that were defined during that process where we collaborated with the private sector and other public stakeholders was speed. And we knew that we have a robust electronic payments movement here in the US, but we wanted to increase speed, but not with sacrificing ubiquity or safety. So we're still aiming for that ubiquitous connectivity, which is more of a challenge for us here. Security, making sure that we keep public's trust in our payment systems and build that confidence with whatever is developed was another desired outcome. Efficiency, understanding that from end to end, we wish to reduce the costs, the societal costs in general within those payment clearing and settlement phases. And then also a desired outcome was an intent to better operate cross-border payments and any international transactions. And then collaboration with the industry. And the Faster Payments Council then was stood up as a trade association, which has been a great collaboration to move forward as we do have several faster payments networks within the US. NACHA, their same-day ACH product came out in 2016, starting with credit, and then in 2017 they added the debit optionality, and then those faster funds availability followed. And they also started with a $25,000 limit for same-day ACH and moved to $100,000. And now this year we're looking at increasing to 1 million for transactions. And we also opened up those operating windows within same-day ACH, and the Fed is an operator in the ACH network. And so in 2023, FedNow will become another faster payments network in the US amongst RTP, the real-time payments by the clearinghouse, Visa Direct, MasterCard Send, and then some proprietary networks like non-bank providers, Venmo, and bank consortiums like Zelle. And with that, we did not have a mandate, or we do not have a mandate that financial institutions must offer any particular faster payments, which I believe in Brazil, there was a mandate for the largest financial institutions to join. So just kind of comparing and contrasting with that requirement, if there's 773 participants in PIX, 36 financial institutions being mandatory, which is somewhat of an advantage when you're talking about ubiquity. And there's 93 non-bank providers that provide access to Brazil's real-time payments. And then a big handful of credit unions and smaller financial institutions. So here in the US, we do aim at ubiquity, but it's a greater challenge with many more financial institutions and many more payment service providers. So just to kind of lay some foundation to our journey and kind of where we are today.
Yeah, I see João raising his hand. I think he might want to comment on something here, João. Go ahead.
Yes, I know, great comment. Yes, it's a mandate. If you were a regulated institution, meaning a bank, meaning a deposit-taking institution, or a credit union or a payment institution with more than 500,000 transactional accounts, means savings accounts, deposit accounts, or payment accounts, you were, sorry, the central bank mandated that you participated in PIX. That's a heavy-handed decision. And the central bank believes and yes, I think that the structure of the US industry is very different historically, very much more regionalized. So challenges will be different, but different regulators. So that from the Brazilian perspective, that comes in handy. But it was a decision to make it mandatory. so that you sort of solve part of the network externality problems by regulatory mandate. Heavy-handed, but solve the coordination problem. There are several other payment schemes and operating in Brazil, and nothing has ever prevented, for instance, other big payment schemes from launching fast payment initiatives. In fact, the central bank tried to foster it so that the industry would come up with a solution by itself. Well, I think for several reasons that we might not have time to cover, it didn't. So that was why the decision to intervene and do it from an operational perspective.
Yeah.
As a more general comment, I believe that fragmentation, everything else constant, is bad in payments. But on the other hand, there's a trade-off, because you go heavy-handed and provide one, and you have to let the market work and try yours. But the choice here was, we'll provide the payment scheme and solve part of the network externality problems by regulatory mandate. That's totally true.
Yeah, and thank you for that. And that is the perfect segue to my next question, that I'll address that to Shadid, because it relates to one of the objectives that was to foster new business models, right? And Shadid, you have a very unique type of experience, right? You've worked on both incumbent, predominant players in the financial services market, and now you're leading a quote unquote new entrant, but I mean already very successful, and a large organization in the space. So who wins and who loses with the new business model that are being enabled? And what do you believe to be your, obviously whatever you can share, your differentiated strategies that are allowing PicPay to be as so successful as it has been?
Rodrigo, it's quite interesting, because if you look at PicPay's history, it was launched in 2012, and the main value proposition was basically P2P and QR code payments. So you could say that what we used to offer was instant payments, just as if it was a forerunner of Pix itself. Mm-hmm. So it was not a very easy decision, because obviously people get in love with their own products. They don't want to abandon it, and we had to make a choice, because we at the time Pix was launched in Brazil, PicPay already had about 38 million users, so it was quite a large environment for P2P payments, and we had to make a choice. We could either fight and Pix and actually stick to our own product, or we could actually embrace Pix. And it was not an easy decision, but I think that we can say now that it was a correct decision to embrace Pix. And most of what actually drove us to do so was if you're running a payment scheme, but it's not really ubiquitous, you get a fragmented experience for your users. So in order to actually make a P2P transaction, if I have a friend and he's not in the system, I need to get him into the system. So it's a lot of attrition. So with Pix, what we've decided is, let's actually bet on what we have, which is the consumer experience and our product offering, but let's actually use the Pix trails or rails, because it actually gives us national acceptance at once. So we basically embraced it. We even went to TV and made some ads, and we tried to, in our minds, we said, our Pix will be the best Pix in the market. And that's what we focused on. And I think that we've been pretty successful. Basically, what we have nowadays about 7.5% of all Pix users in Brazil, and that's kind of a disproportional size. And going to your question, who are the winners and the losers? I would say that my ranking of top winners, consumers. Basically, this is, and I think that numbers talk by itself. They just, 120 million Brazilians using Pix. You don't have to say much more than that. I think that sellers also, the retail community, and I would say that, it's a less expensive payment method. I'd say that fintechs that actually embraced the initiative, I think are also winners, because in the end of the day, if you put all your agility and the way you actually treat customers into that rail, I think that you get, let's say, you're faster to implement faster payments. And in the end of the day, I also think that Brazil wins, as I think, as João mentioned, 45 million people. That's a proxy, but those people who had never had that option and now have, I think, definitely are the winners. Well, on the losers side, I'd say that maybe large incumbent banks, they did lose some of their business revenue streams, like all the wire transfer previous products that have been almost instantly replaced by instant payments in Brazil. I think that debit card schemes, there's debit cards are still growing in Brazil, 12% in the first quarter. But I would say that in the long run, it will be cannibalized by Pix. And also, you could say that some closed QR code networks are losers. We used to be one, but as we embrace Pix, I don't feel that we're losers. We're actually winners. But if you wanna keep on your own small network, I think that that's a losing proposition.
Well, thank you for that. Very, very thoughtful and insightful. Tim, how do you relate to some of these dynamics in terms of the business opportunities and what you're working on or seeing happen in the US? Again, in terms of winners, losers, you're very active and part of some of the incumbents that already operate in instant payments arena. At the same time, being at Regions Bank, you're looked up by smaller banks as some aspirational dynamics, and FedNow might enable all of them to be part of that. So how do you see those opportunities and on your space?
No, I think that, it's an interesting question you pose, Rodrigo. I mean, who are the winners and who are the losers? So, here in the US, traditionally, what we've done with our payment systems is that we've had them compete against each other. So we truly did say, okay, which payment system is going to be a winner? Which payment system is going to be a loser? And we really made that determination based on, what we believe the benefit was going to be to certain users, and the challenges that others may face as a result of that. What I would say, though, is that in my career, and even when you look historically, instant payments is the first capability that we've rolled out here in the US that we didn't do so within the context of, this is going to cannibalize intentionally some other payment type. So for example, when we rolled out electronic payments in general, and by the way, that's almost 50 years ago, we said, guess what? We're going to get rid of all of the paper checks. They're going to disappear. That was 50 years ago, all right? So here we are 50 years later. there aren't as many checks as there were in the past, but there are still checks that exist. And I say that to say, and we've also said the same thing about cash. Well, we're going to become a cashless society. There's no indication that cash is going away. So when we looked at instant payments, we really drove that as an industry from the perspective of what is it that we're really trying to solve for? And there were three things I think that the industry was focused on. It was speed, as Jessica mentioned. It was transparency, which is something that we do lack with some of those other payment types. And then it was also a security piece. And so we've been able to deliver with instant payments, all of those components. And even as we think about the Fed's rollout of FedNow, that's being positioned as a way to provide for greater transparency, greater speed, and greater payment security. Will that kill any of the legacy payment types? I don't believe so, because those legacy payment types do provide similar capabilities or some of the same characteristics, but it's really about the use cases. Where does it make sense to use an instant payment versus where it may make sense to still use cash or to use card? And so when we rolled out instant payments here in the US, we really thought about it within the context of what were the use cases that didn't really get fair support through those legacy payment systems. And I think that when you think about winners and losers, for some of those legacy payment types, what you really see is that because we were using those in many instances to try and solve for support use cases that they were never really designed to solve for, because again, I want to go back, 50 years ago, nobody was talking about the internet, right? 50 years ago, nobody was talking about TikTok videos. 50 years ago, nobody was talking about cryptocurrency. So what we've done is we really said, hey, we have these 21st century type use cases we can't solve for. Let's build to solve for those. That's what these new instant payment solutions really help us to do. But they do that, I believe, without being a detriment to some of those conventional or traditional use cases that the legacy payment rails supporting.
Gotcha. And Jessica, piling on Tim's comments about the trajectory and evolution of payments means, what do you believe will be the critical success factors for adoption of the FedNow platform and the instant payments more broadly in the US? And how do you see that dynamics for potential payments means substitution or balance in the evolution of it?
Mm-hmm. Yeah, so thank you. I'll kind of build on some of the points that Tim made as far as adoption goes. And I have a presentation that I sometimes do called Faster Payments, and talking all about the different options, but slow to change in behavior. And the Atlanta Fed has a consumer payments research center and has been tracking very closely implications from COVID to see what has changed. But overall, since the ACH network started in the early 70s, payments behavior has been slow to change. And, lately we've been talking about the adoption of new overlay services and different methods of accessing payments. But when you think about the fundamental rails of clearing and settlement, those avenues are slow to change, and for many different reasons. Some things that we have been tracking, we also do the Federal Reserve Payment Study with the Board of Governors. And recently we have seen that COVID has had a large impact on consumer spending and how people spend. So there was a large shift to online from in-person. And in the P2P space, we did see that online or mobile apps were largely newly adopted over cash and check. And we can compare that to the 2018, 2019 increases, which were much less significant. And another effect that we saw during COVID was that there was substantial check decline, as it has been, but even more steep. The share of ACH payments actually grew by value and number. It was the, as far as interbank payments go, ACH was the only payments network that grew in 2020. And we did see that the value of remote card payments overtook the value of in-person card payments in 2020. There was a bit of a rebound in Q3 for in-person transactions. So where I believe Brazil, several years ago at the inception of Pix, Brazil was looking at close to 70%, cash transactions, where the share of cash transactions a couple of years ago was near 30% here in the U.S. So there's a difference.
It was around 54 a few years ago, but yeah.
54. Oh, yeah. Okay, thank you. And thanks for that clarification. So, the drivers to, for adoption are different. The main adoption method for Pix is mobile payments. And we know that there's some statistics how Pix users are, the majority of Pix users are new online shoppers, where I don't think that we have that as a driver here in the US. I don't think any faster payments network or rail will be able to say that, the new adopters of that rail are also first-time shoppers online. So we do have a different dynamic as far as adoption goes with FedNow, and ensuring that, because it's an interbank system, ensuring that there's equity and inclusion in the rollout of those services will absolutely enhance adoption, and giving the smaller to regional mid-sized banks a chance to connect will, absolutely be a benefit for adoption.
Great, thank you. And Shadid, I'll flip to you now, and to get your perspective on adoption in your case and also in the market. What do you believe are being the key elements to drive adoption, and if really a more digital society means a more inclusive society to that extent as well? And right on the flip side of that, what are the unforeseen risks that you are seeing happening and associated in the dynamics of the market? And I know there's in Brazil financial services industry, there are always some fun anecdotes about risks that we hadn't unforeseen, right? So if you have anything to share in that regard as well, please just go ahead and tackle both of them.
Okay. Well, first of all, I think that, and I must say that the central bank mandating adoption by by the large banks and standardizing the whole process, including the UX. I think that was vital for a quick takeoff of the product. So when I said that, for us, one of the main reasons for adopting Pix, instead of trying to keep to our own network, was the ubiquity of it. And to the extent that when you mandate the adoption of that by the largest banks, I think that was a key factor, as well as all the standardization that I've just mentioned. So that was clearly one of the key, let's say, key points here to drive adoption. Obviously, I mean, I think that on the fintech side, everyone jumped eagerly on that opportunity, because as João mentioned, it also levels the playing field. So the challengers can actually drive lots of the adoption also, and you can see that in numbers also. Now, obviously, with every new payment scheme, there are challenges. So, and I think that they've been we've been addressing them ourselves, the players, as well as the central bank. So obviously, with instant payments, there is it's a new environment for fraudsters. So if you compare, for example, debit transactions would settle overnight in Brazil. Now with instant settlement, that's different. So we had to adapt here all our fraud prevention models to that. You don't do that instantly because modeling is never instant. So let's say that we've suffered for a few months, but now we feel pretty confident that we're, let's say, on par with debit card transactions. I think that also the central bank established some limits, so the precautionary blocking that you can do to evaluate risk. I mean, some devolution mechanisms as just like chargebacks. So it's an evolving process. I think that everyone would expect that, but it's only when it actually reaches critical mass when you actually can tackle really those things. And I think that the market has been addressing that more and more.
Great. Yeah, great. João, any element on the risks that emerged after implementation that had not been anticipated, or anything that you want to highlight on that side?
I agree. I totally agree with Shadid on this one. I think most of the risks were anticipated in the sense that we knew that general things. I think it's better with a concrete example. In a high level of generality, of course, it's a new payment scheme with a different user experience and faster. So that opens opportunity for fraudsters. Exactly what opportunity is hard to anticipate. Well, by design, PIX was constructed such that the central bank and industry could react fast to any specific risks that materialized. I think one thing I'd like to take the opportunity to say that what you have to, I think Shadid was right on target. The thing is not whether PIX increases or reduces insecurity in general. It's how much fast payments increase above and beyond what is already secure or insecure with the current payment schemes. And whatever security problem that we have, because we are now transacting with a mobile phone, which is it's a different game. A lot of the frauds that were perpetrated, if you squeeze it, they're facilitated by mobile banking, not by PIX or credit card or debit card. I think it's important to say that we have to compare with the alternative. It's an alternative. It's an opportunity cost kind of reasoning. What would have happened without fast payments? I don't think the evidence. The jury's still out on that one. I don't think finality and being instant increase insecurity. We had, for instance, in Brazil, one thing that it didn't catch us by surprise, by the phenomenon, but the magnitude and the degree, and actually not even the magnitude, but the repercussion for public opinion was that it's not something that's relevant in the US, is like robbery perpetrated, like someone points a gun to your face and tells you to transfer some money. That one had because of the Brazilian context and and public security challenges that we might have. But then again, you can't go after debit in a D+2 one, and Brazil already had de facto instant payment schemes that robbers could just have bank accounts at 5 banks, and they could reproduce PIX before PIX. So, but the repercussion in public opinion caught me a little bit by surprise.
Right. Yeah. So I'll try to tackle the last question here, starting with Tim, about what's ahead, right? And then hopefully we'll have a few minutes for questions from the panel, from the audience. We have already embedded some of those questions into the dialogue here, but Jessica Deal will help us in the last five minutes or so. But Tim, looking ahead, right? What are the opportunities out there for instant payments? You mentioned already the international, right, cross-border payments, and I'd like to ask you about that. But also, given the many schemes or platforms that you already have in the U.S. and giving the need for standardization. When you think about international settlements, international cross-border payments in an instant fashion, how do you see that evolution going, and what's the opportunity there that you are anticipating?
Yeah, let me talk first of all about international. I think when you consider that, today there's 60 some odd countries around the globe that have deployed real-time payment systems or networks, there is this vast opportunity to leverage those as we begin to think about interoperability. And I think on the interoperability piece, which is primarily a technical question, the fact that when you look at real-time payment networks, almost without exception, they're all leveraging the ISO 20022 messaging standard. Now, granted, there are different nuances to how those are being implemented across the globe, and even here within the US domestically, as we look at the Fed rolling out their network and what we already have from the private sector, the ISO formats that they're using are different. So there is some reconciliation has to take place. I think that makes me very optimistic for developing a global network that, in theory, gives end users the ability to send a payment to a next door neighbor, to be able to send a payment to a family member in a different part of the globe just as easily as they would to someone who lives just a couple of doors down from them. I think where the challenge is going to be, Rodrigo, and that's the piece that I think the industry has to work out, is the risk in the compliance side of this, right? So we do not have compliance systems, and in most cases, risk management systems that operate in a real-time context. And so we've got to build those capabilities. We also globally have to come to some agreement around what's going to be the regulatory and compliance framework. I think domestically, there's great opportunity for us here in the US. As you mentioned, we have a number of different platforms. We soon will have a couple of different infrastructures that support instant payments. And I think that allows for, here in the US, for us to move to true ubiquity. Currently, about 60% of the demand deposit accounts in the country are enabled to be able to receive a real-time payment. As we see FedNow coming into the marketplace, the expectation is that we will see that move closer to 100%. And for us, I think that will be a large milestone in terms of newer or expanded opportunities to innovate and to provide additional value to all parties in the ecosystem.
All right, appreciate that. João, quick question, super quick. Do you believe that CBDCs will be the natural next step to facilitate the cross-border evolution of instant payments?
Yes. Cross-border, as Tim said, I think the standards are already set. The ISO, the messaging system is standardized. Now, CBDC is a choice of where the liability is. I think Tim mentioned something quite important here, which is what is the problem they're trying to solve. I think that goes for instant payment, that goes for CBDC. The problem we're trying to solve, at least in Brazil, is that it's expensive to do exchange rate. And there might be different solutions to that problem. One might be a payment scheme that starts from scratch and builds on international standardizations to increase competition in doing exchange rate transactions, and that's, at least from our perspective, is a problem that we're trying to solve.
Yeah.
Or would be trying to solve with cross-border payments.
So maybe Lucia, Steve, and Doris, we might have already the theme for your next year's panel on CBDCs, because I bet this discussion will be much more heated by then. Jessica Dill, sorry for not having properly introduced you in the beginning of the panel, but Jessica Dill is another great professional of the Atlanta Fed, super talented researcher on many aspects of it. And Jessica has been compiling and having some of the questions from the audience. Anything you want to address to someone, please go ahead.
So I'm going to try to group some of them that seem similar, and then I'll open it up for the panelists to chime in on the aspects that they could speak to. So one of the questions we received says that a speaker mentioned that Pix has enabled fintechs to compete as a payment service provider. They want to know, what is the underlying financial plumbing that supports this? And is there a risk of fintechs taking away funding from the banking system, or does Pix somehow avoid that risk? And related, Jesse asks, beyond the mandate for the largest banks, how did the central bank encourage adoption by other financial institutions and service providers? Did the central bank take on any education or promotion effort to push for this? And then also related to that, Patrick asked, how were customers acquired? And I know that you guys spoke to the central bank mandating adoption and also on PicPay TV ads, but if you could speak to that collection of questions, that would be really helpful. And maybe if I could call on someone, could I start with João?
Great. Thanks, Jessica. On the first question, we already had a vibrant, let's say, payment account environment here, which are basically 100% fractional reserves that payment institutions have to deposit at the central bank. So if that would disintermediate banks or take away funding that would go, however, the plumbing would be to end users, I say consumers and companies that need funding, would have happened pretty much anyways. And I don't think Pix or having instant payment changes fundamentally the game. Might change the game in a sense that levels the playing field. So payment institutions were entrants. As far as you level the playing field, they're gonna have more. We don't use the term deposit, right? But prepaid cash in their accounts. Mandated institutions, how they represented 90% of the transaction accounts in Brazil. And that threshold that I said, if you had more than 500,000 transactional accounts, that account had to receive and send Pixes. I think the other 5%, the onboarding was, you didn't even need to, right? Because it's so ubiquitous that it automatically, institutions that were not mandated just jumped in to start with, because they knew that there was a big risk of being out of something big here.
Right.
So users are payers, meaning payers, individuals are acquired through that way. The other topic that I'll let Shadi comment if you want is how merchants use the Pix, which then is a different game.
Yeah, you're on mute, Shadi. Yeah, now you go.
Yeah, maybe I can add one thing that I think that it's not trivial, that helped adoption also. It's fact is that you need to have a ID key to transact with PIX. And there are only a few, let's say, main keys, which is the social security number, your phone number, maybe your email. And so that also brings kind of a race between players, because you want to have one of the main keys registered on your with you. So that also caused kind of everyone was actually fighting for the main keys of those customers. Obviously, customers can always deregister a key and register with someone else. But truth is that that's also a process that is not, well, shifting costs is always large here. So I think that also drove many of the players to, let's say, fight for the main keys, which obviously, if you have that kind of competition, it also drives adoption from a user side, because everyone is eager to onboard those main keys. On the seller side, I think that the adoption is, and it's naturally a little less, let's say, rapid. It's not that fast, because you actually have to start integrating with their own checkout systems. I think that, let's say that in my view, for the very small merchants, adoption was really fast. If you get to a taxi driver in Brazil, he will probably ask you to pay with PIX. With some smaller merchants also. I think that with e-commerce merchants, we saw a very quick adoption also. And I can see now that let's say that the mainstream point of sale merchants are actually starting to adopt more and more. In our case, there is one figure that is, I think that it's relevant. As our users were always used to making QR code payments, and that's the best way to do it at the point of sale. We, on average, have a 50% higher adoption at the point of sale, because users already used to use QR code payments at the point of sale. So I think that there is some education and some getting used to from both sides, sellers and users. But I mean, it grows every month.
Perfect, thank you. So time flies when you're having a good time, right? And unfortunately, we are already a few minutes past time. I'll thank you. It's been a pleasure to moderate this panel. Thank you all for the opportunity. I'll hand it back to Lucia for the closing, Lucia.
Well, thank you very much, you panelists, Rodrigo, for carrying this conversation to the high level, and also for just planting the seed for us to come back next year, or who knows, in a few months, and continue this discussion. It's always a great pleasure to host an event with the partnership of the Federal Reserve Bank, and of course, with all this talent that has so much to share to this audience. Thank you, audience, for participating and the great questions. And I just wanted to finalize with bringing in a little bit about the Brazilian American Chamber of Commerce. We are a nonprofit organization, but we are a membership organization. So I need you to join us so we can continue to bring those great events that we have participated so far. Thank you very much. Have a great day and be safe.